A number of Bitcoin metrics are suggesting a huge amount of BTC is being transferred by some of the oldest wallets on the network. Is this really Bitcoin whales dumping their coins? And if so, could this once again be signaling a bull market peak? So we'll jump right into it here on the Whale Shadows chart we have here on BitcoinMagazinePro.com. Now what you can see is if we just remove the 7 to 9 year Whale Shadows here, looking at purely the Bitcoin movement that has been held for over 10 years, the coins being held for over 10 years, and those of over 100 BTC or more, we can see recently we've had a monumental spike in this metric, the biggest we've ever seen from coins this old. And if I just zoom in here and hover over it, we can see 80,014.93 Bitcoin on July the 4th was moved on chain. And these coins had been dormant for a long time. We just go to the alerts logbook here. What we can actually see is this resulted in metrics such as the supply adjusted coin days destroyed, suggesting that we may be approaching a cycle high. So what we can actually do is first we just look at the coin days destroyed here. We can also see that this has spiked tremendously. Now, rather than just looking at the 90-day moving average of this, if we look at the raw data, we can once again see that this has been massively influenced by this huge amount of BTC that had been moved after being held for a considerable amount of time. Now, what we can do is actually just work a little bit backwards here. So I've got a calculator. And what we can see is this amount of coin days destroyed was 419,951,000. And if we divide that by the Bitcoin that was transferred, which was 80,000 Bitcoin, well, 80,014.93, divide that by 365.25 for the number of days in the year, including leap years, we can see that this Bitcoin was held by someone for 14.369 years. Now, there were a number of on-chain analytics platforms that are actually monitoring these individual transactions, looking at the blockchain data in its raw form, such as Look On-Chain and On-Chain Lens. And what we can see is it seems like all of this Bitcoin has gone to Galaxy Digital, likely to be sold over the counter. So while it might not have an immediate impact on the market, it's not like they're going to just be pressing the market sell button and causing a huge amount of downwards price action and slippage in the market. This is likely going to be scaled out over an incredibly long period of time. And again, on over-the-counter trading, so it's not directly hitting the open market. This might not actually have a monumental impact on the Bitcoin price action. But like I said, if we look to the alerts book here, we can see that this has potentially indicated a cycle high. If we go to the supply adjusted coin days destroyed here, we can see this has jumped above a value of 1. And if we just look at historical instances of when this occurs, we can see when this does climb above 1, historically it has indicated a time in which we should maybe consider scaling out of our positions, maybe just reassessing our strategy, maybe not aggressively dollar cost averaging into the market. But like I said, by looking at some of the data, it looks like this mainly came from one individual. So really, do we need to be looking at Whale Shadows in terms of the quantity of Bitcoin moved, or is it potentially more important to be looking at the number of whales actually participating in this movement? So what I can do is if we just go to this chart here, which is utilizing the Bitcoin Magazine Pro API. So what I've done is just pulled the supply adjusted coin days destroyed data here and put it into this Google sheet. What we can see, this is exactly the same. This orange line is representing the supply adjusted coin days destroyed. But if I just zoom in, what we can actually see is if we remove this one individual's transactions on the network, we can see that this actually massively decreases how much this has spiked to the upside. So this red line is what it is by default. This is what we're actually seeing on site, where this has jumped above a value of 1. But if we remove this one transaction, bear in mind this is a 90-day or 3-month average of the coin days destroyed, the supply adjusted coin days destroyed, what we can see is it massively reduces how high this has jumped up. And it's only currently around 0.77 if we're excluding that transaction. So if we go back here, we can see a value of 0.77. We'll put it somewhere around here, which is definitely nowhere near bull market topping territory. Now, of course, it's not great that we have to slightly interpret the data and slightly manipulate things to actually gain an understanding. What we can do is if we just go back to the Google Sheets here and look at another few data points, which maybe show us why we should be slightly altering the data that we're actually examining here. So if I just go to this here, what we're looking at is, again, this is using the Bitcoin Magazine Pro API data as well as some raw blockchain data counting the number of transactions from whales. We can see this red line here is indicating the amount of transactions actually being made by whales. Now what we can see is these do considerably spike as Bitcoin is coming towards market cycle peaks. We can see in 2017 here, the pretty much all-time high in the amount of whales transacting on the network, coincided exactly with the bull market topping out. We can see this big cluster over here was as Bitcoin was topping out in the previous cycle. And we can see even during this cycle, when we've had big spikes to the upside on this metric, is when we have reached new all-time highs at $74,000 last year, and when we first breached $100,000, which makes sense. But if we just scroll down, what we can also see is, rather than just looking at the raw data, I've actually averaged this out over a 28-day or 1 month period, just to give us slightly smoother signals. So again, we're trying to avoid big anomalies, big one day, one individual person really influencing these metrics. So if we look at over a slightly smoothed period, a 1 month or, as I said, 28-day period, we can see the data becomes really clear and actually really insightful, again, to try and time these market cycle peaks, because these are occurring exactly as the Bitcoin price is topping out. So I think something like this is probably something we really need to be paying attention to going forward. But I've taken it a step further, of course, looking at the rate of change in this metric. So again, this is the 28-day moving average of big transactions on the network, and then the 28-day rate of change in that. So this is just the percentage difference between the first day and the 28th day of this averaged out data. And we can see this takes it even a step further for potentially more intra-cycle, more frequent signals. And again, this has worked incredibly accurately. What we can see is looking at the 28-day rate of change here, it's signaled as Bitcoin first surpassed $100,000, again, as we first hit $74,000, breaching our previous all-time high before the Bitcoin halving event post the ETF launch. And we can see this has worked incredibly well all throughout Bitcoin's last few years. I've only limited it to 2016 because prior to that, because the whales hadn't actually been around long enough to actually count as whales who'd been holding their coins for a long period of time, it slightly warped the data. But what we can see, again, this has worked incredibly well. And as I said, even in a more intra-cycle basis, just catching these local tops before Bitcoin actually has a slight retracement during a bull market. What we can see is same is true for the downside. Once we see a huge reduction in the amount of whales actually transferring their coins, taking a step back and thinking, right, maybe we shouldn't be selling here. Maybe this is Bitcoin at a discounted price. I think selling here isn't going to be the best bang for my buck. I'm going to wait until considerably higher prices. We can see that this again has signaled local bottoms in the Bitcoin price action. And what we can do is if we just look at to now where Bitcoin currently is, we're at very muted levels. We're definitely not at a point where we need to be thinking, right, are whales dumping their Bitcoin? Is now a time to start rotating out, taking profits, stop scaling in, etc. Because really when we're looking at data like this, sometimes it's really helpful to just copy what the big players are doing. They have an influence on the market. When someone sells 80,000 Bitcoin, that is going to influence the supply and demand economics of the network. But if it's just one individual over the counter, then a lot of this Bitcoin may be scooped up by institutions who maybe don't want to buy spot Bitcoin and influence the underlying market price. We can see just in the past few weeks alone that looking at the cumulative flows from the ETFs in Bitcoin. Now, I know these aren't all institutional buyers, but a portion of them will be. We can see that on the 4th of July, the day that big transaction happened, there was 670,000 net inflows from these ETFs. And today we have nearly 704,000. So call it 34,000 Bitcoin accumulated during this time. If we look at the Bitcoin treasury companies, I mean, MicroStrategy alone has accumulated over 10,000 Bitcoin since then. And if we look at something like the short-term holder supply, so we're already accounting for treasury companies which have accumulated tens of thousands. Institutions or high net worth individuals accumulating through the ETFs have accumulated tens of thousands. And if we look at the short-term holder supply, again, if I just zoom in here so it's a little clearer to see, from the 4th of July, they had 4,075,000 Bitcoin held by new market participants. And now we're already at 4,245,000, so a little under 200,000. So all of this Bitcoin, even though it's likely not being sold immediately, it's likely being scaled out over the counter trading to not cause a big market impact, we can already see this has been accumulated, it's been accounted for. It may have contributed to the slight retracement and consolidation we've had in price action. Of course, when billions, nearly $10 billion of Bitcoin hits the market, that's going to be not great for price action. But as we can see, this has likely already been accounted for. The demand for Bitcoin continues to remain incredibly high, and the market in general looks incredibly strong. Even though if we look at something like the value days destroyed, we're starting to see this really spike to the upside. This is almost all due to one individual transaction. And looking at the more nuanced data, really diving into the blockchain raw data, we can see that the number of whales actually taking profit and dumping their coins right now is incredibly low. So it's not something we really need to worry about for big players really offloading their coins and signaling a bull market peak. Also, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, a number of whale tracking metrics have recently indicated a huge amount of old Bitcoin have moved on chain. And this is true, it's undeniable. We can look at the blockchain and see that this Bitcoin has been transferred from an old whale to new wallets. However, it's maybe not quite as concerning as many have made it seem. While nearly $10 billion of BTC hitting the open market is of course not great, we can see that this has been transferred to Galaxy Digital, who are likely going to be scaling out over a long period of time to not have a big influence on the market. And it's almost certainly going to be OTC trading, over the counter, potentially selling to institutions like Strategy, other Bitcoin treasury companies, high net worth individuals, who don't want to have a big impact on the market. So we might not actually see this hitting the Bitcoin spot market and influencing price action like we maybe have anticipated. And what we can also see is it looks like a vast majority of this Bitcoin, even if it was to hit the open market, has already been accounted for. We've seen tens of thousands of Bitcoin in the past few weeks alone being scooped up by institutions or ETF buyers, as well as Bitcoin treasury companies. So we can see that even the big buyers have accounted for most of this, but the short-term holder supply has also increased by hundreds of thousands, which is really showing the new influx of demand, the new market participants coming in and accumulating Bitcoin even close to new all-time highs, which really outlines the current strength of the market. So of course, looking at metrics like this, we may need to slightly tweak their formulas just to ensure that they're not overly influenced by individual transactions like this or one-off anomaly events. But really, this individual had been holding for 14 years. Fair enough, you maybe deserve to cash in a little bit and live a life of luxury after hodling through all that time. But just to conclude, I don't think this is anything we need to worry about. There's not a huge amount of whales dumping their Bitcoin, and in general, the market looks pretty healthy to me. If you liked this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on whales potentially dumping their Bitcoin. Is data like this something that you're going to be keeping an eye on over the coming months and potentially years to try and signal a Bitcoin bull market peak so you can take action? Or what other metrics are you focusing on, again, to try and help time your investment decisions and analysis? Let me know in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.